Hello, this is Zahra from OTET Markets. We'll be with you with the global economic outlook in the week ahead, which is going to be the 35th week of the year. As always, let's check and see what we had last week, then we can go forward and check the week ahead. Last week, generally, it was a very busy week with too much data and events. On the economic data front, mostly focus was on PMI numbers, manufacturing and service sector PMIs released last week in the most developed and developing economies. We had these data, including Japan, China, not China, Japan, in Asia and European countries, UK and United States. Most of these economies, they confirmed, they showed once again that the service sector improving a little bit better as it's the summertime, but the manufacturing sector, productive sector, production sector is still struggling. And Europe, PMI, service PMI jumped very big, especially in France, mostly thanks to Olympic Games that we had in France, and that helped the service sector to improve a little bit better. But generally, the data, they were not impressive, as it is just like it has a short time reason for this jump. On the other parts of the world, as I told, in the United States also, we had PMI numbers. In the United States, generally the data were a little bit better than expected, showed that better than expected. But if you look at the data, we can see that it was not much better than the previous week. But especially in the service sector, it was not just less than expectation; it was less than previous week as well. Generally, manufacturing sector in United States also showed weakness, but housing market was better for existing home sales, and both new home sales, they improved a little bit better than expected, especially the new home sales jumped by more than 10% after 0.3% improvement in June. In July, we saw that the new home sales improved by more than 10%. However, the week, mostly the focus of the week was on Wednesdays, on Wednesday and Friday. Wednesday, we had minutes of the Federal Reserve meeting, of the Federal Reserve previous meeting, which showed more members, and the most FOMC members, they support the rate cut, and now the chance of the rate cut is fell to 24% for 50 basis point and increased to 76% for 25 basis point for the week ahead. That shows that which means that at least 25 basis point rate cut we will have in September, which increased a little bit pressure on the US dollar and helped a little bit US stock markets. But on a Friday, we had Mr. Powell's press conference interview on a press conference in the Jackson Hole. We know that last week in the Jackson Hole, most of the central bankers from the central bank from Japan, Asian, European, and also United States FOMC members, they had a speech. And as we talk about the Mr. Powell's speech, Mr. Powell confirmed that at least 25 basis point rate cut we will have on September meeting. That, as I told, created the pressure a little bit on US dollar, more pressures, and helped the stock markets to increase a little bit more than before. If we look at the week ahead, that was, as I said, on the geopolitical, before going to check the economic data in the week ahead, let's talk about the geopolitical tensions. On the geopolitical fronts, we know that both Russia and Ukraine, they claim that they have improvement, they had the advance in the getting the territories, each other's territory. But generally, the data, which with the map when we are looking, we see that after Ukrainian attack to the Russian core city, they have a less lower number of the soldiers in the southern areas in the Ukraine, so which helped the Russian to have a little bit more advanced improvement and progressing in the catching the Ukrainian territory. Between the Hamas and Israel, the last week peace talk ended nowhere, so they continued to the peace talk, ceasefire actually talk, not after they had no reason in Qatar. Now they're continuing this ceasefire talk in Egypt. So we'll see what's going to happen there. Now there is a more chance actually for to getting some points, but generally, as the geopolitical tensions is going on in between the Russia and Ukraine on that side, and the election in the United States, most probably we will not have any ceasefire or the peace talk before next election in the United States. And before that, if we know the result of the election, most probably the Israelis will continue this just like uncertainty until they have the results of election in the United States. Depend on that Trump will win or Kamala Harris, they will change their policy. On election front, is the candidate just from the independents, kind of, we can say independent parties, he just already quit his. Sorry, he already quit the election race, and now he joined right now to Mr. Trump and endorsed the Trump campaign. Mr. Kennedy had more than about 15% votes, just like before the Kamala Harris. She got in the election, and when the Trump was fighting with Biden. But now after the Kamala Harris elected as a nomination of the Democrats, he lost about 10% of his votes. Now he has around 5%. How many of them they will be able to confirm? I mean, how many of them they can come with with him to support the Mr. Trump's campaign? It's a little bit under question, but generally, a combination of the Kennedy and the Trump says that those talks about the Trump, that he's in a very right side of the right party, and just like a very the corners of it, just like that can somehow soften these talks and they go that okay, the middle. Now we can say that the Trump is the just like comes from the middle part of the middle zone of the sort of right parties, and now he is not that much just like kind of scary that the Democrats were talking about him before. Anyway, that can help just like sentimentally at least can help the Trump campaign, especially in his in the debate in September 10th, and for their just like then maybe they have a second debate as well in October, but at least in a September 10th they have the first debate, and that can help the Trump in this debate. On the economic data front, the week ahead, United States will not be such a busy week, but will be very important week. As on Monday, we will have durable goods orders. We expect to see a little bit progress after the last month more than 6% fall. And then on Tuesday, we will have a CB consumer confidence. We expect to see weaker confidence falling from 100.3 to 100.1, showing a little bit that the uncertainty in the market, and the clients and the consumers feel uncertainty and feel less safe before election and before they know what's going on in election or what's going to happen in the election front. And then on Friday, actually, the focus will be on Thursday. We'll have a GDP numbers for the second quarter, but the focus will not be too much on the GDP numbers. I mean, the market will not focus too much on the GDP numbers. We already had this data, and we don't want to see that any big movements, any big changes in the data. So generally, but that's why mostly we will focus on the Fridays. Consumer spending, just like personal income and spending numbers. We expect to see the spending increase a little bit more than expectations by 0.5%, which is going to be the biggest improvement in the last 4 months. But the core inflation for the PCE price index and the core inflation and headline inflation of the PCE spending, personal spending, will be around 0.2% improvement in monthly base, which means that in annual base they will be a little bit softer. But as I told, softer inflation will combine with the 0.5% spending. That can say that the consumers in the United States, they are still ready to spend the money, and that can somehow put more shadow on how the future of the inflation will be in the United States. Until Fridays, with this data, we expect you start to get a little bit more pressure, but on the stock markets, they can be a little bit positive sentiment. But for Friday, since that we have already the doubts in the market, if the Friday's inflation numbers come a little bit more than expectations and show more pressures, bigger numbers, then we can say that, okay, pressure on the stock market can double with the doubts that right now we have on whether the stock markets are already overpriced or not. If we see a little bit bigger numbers in inflation, or just like surprise numbers in inflation, then we can see more pressure on the stock market. But if the inflation can continue further and fall as it's expected, then we can see a little bit better sentiment in the stock market and more pressure on the US dollar index. That what we have on the United States. In Europe will be a little bit, and Europe also will have a light week, mostly on inflation numbers and the GDP numbers and inflation numbers from the European economies and European Eurozone in general. European economies, we're expected to see that inflation in Eurozone, inflation is expected to we don't expect any surprise in inflation numbers. Eurozone inflation expected to a little bit improve, from a little bit fall from 2.6% to generally to 2.3%, the headline inflation, and core inflation from 2.9% to 2.8%. If we see the inflation falling at the same expectation, the same line that we go, it's fine. If not, if it falls more than this, then for now we expect to see at least 25 basis point rates cut in September meeting. If the inflation comes more than expected, if the inflation falls more than expected, we see the low numbers, for example, 2%, or with the core inflation, if we see the numbers such as not 2.8%, if we see the 2.7%, 2.6%, then we can count on 2 more rate cuts after September meeting in November and December meetings as well. Unemployment also is expected to stay unchanged, to remain at 6.5% Eurozone. We are expecting almost the same data for the Eurozone, mostly from Eurozone economies like French and Germany as well. That's the most important data we have in a week ahead. A week ahead will not be such a busy week with the economic data. That's what we told with the same numbers. On retail sales and GDP on retail sales from Russia, unemployment rate from Russia we have, and we don't expect to see any surprise. We expect to see the retail sales to improve by 5.4% in Russia, and unemployment rate stay unchanged at 2.4%. In other parts, yeah, that's the general number that we will have in Canada. Also, we'll have a GDP numbers on Friday. We're expecting to see a little bit lower improvement in the second quarter in the last data in the final data that we are getting this week. That's the data we have. We don't expect any surprise. Let's go and check the charts and see what we have on the chart. Let's start with the cryptocurrency. And on the cryptocurrency front, after the more chance for the rates on the cryptocurrencies, also they got a little bit improved, advanced from this. They got advantage of this news and a little bit improved. Most of them. For the BTC also is right now about 62K. As long as it's about the 62K, we can see the uptrend here with 72K as the next target. But if it falls under 62K, especially if it touches 57K, then it can open the doors for much lower numbers. For now, technically we can see the positive sentiment in the market. US dollar index is falling badly. It was one of the weakest symbols last week from under 101, which is really, it was surprise for the last week. That much fall was not expecting at all. For this week, for the week ahead, we're expecting to see a little bit improvement or correction before next move. 102.10 15 as like the correction target. After reaching this target, then we can see what we'll see where US dollar is going to go further. But right now, generally after inflation numbers, personal inflation numbers on Friday, we can expect the next target. But for generally this week, we can see some correction before Friday's move after PC price index and personal income and spending. On the stock market front, S&P 500 is in a clear uptrend, but it lost its momentum right now. What we can see in the chart, that the money flows in the stock market is getting slower, as we can see in the OBV. You can see here money goes, less money flows into the stock market. That can support the correction. If the S&P 500 fall under 5,560, then we can see the 5,450 or 460 as well. And then if go forward lower than it, but we can, I don't expect to see big slowdown in the stock markets. Most probably we can see it can go further. I mean, we cannot go so much high, but the further slight slowdown we will see in the next days in the stock market in the week ahead. Then on the gold front, let's check the chart of the gold. The gold, the doubts on the stock markets on one hand, weaker US dollar index, lower yields, all of them, they help the gold to stay just in this overall uptrend. Technically, the uptrend is to still continue, even if we see some corrections, but still that can be supportive for the gold for now, as long as we have these doubts and overpriced ideas in the stock market that can generally support the gold price for now. On the oil front, on the energy front, we can see that the WTI increased after last week's fall. We know that generally we have the overall ideas of the geopolitical tensions around, while we have a lower demand. At the other hand, we have the OPEC and its allies that you're talking about, the continuing this production cut in the last quarter as well. Generally, the ideas of just like the factors that they can pressure the oil price and they can improve the oil price, they cannot overcome each other. So that's why we can see the oil again, the volatile movement in the next week as well, around $74 and $80 for the next week. That's generally what we're expecting to see in the markets. If you have any more questions, please don't forget to write down in the comment section. I will try to get back to you as soon as